Okay, I think we can start our webinar now. Good afternoon, everyone, and a very warm welcome from the Dubai International Financial Center. It gives me a great pleasure to welcome you all today to this webinar on Dubai's growth as a global hub for hedge funds and alternative investment. I'm Mohammed Ode, representing the DIFC, and I will be your host for today. We're here today to discuss our latest hedge fund report titled Dubai, the Next Global Hedge Fund Center, Opportunities and Outlook, which will be released by the end of our webinar by the DIFC in collaboration with Refinitiv, part of the London Stock Exchange Group and one of the world's largest providers of financial markets data and infrastructure. The report highlights macro trends internationally, as well as Dubai's growth as a global hub for hedge funds and alternative investments. It also provides insights into the rapid expansion of established hedge funds into Dubai and outlines the DIFC's value proposition as a gateway to the MEASA region and its growing role as a global hub for hedge funds. For those unaware, the DIFC was established in 2004 and is today considered to be the largest and most advanced financial hub in the MEASA region. The DIFC operates under its own legal and regulatory framework and hosts a wide range of business, including financial institutions, multinational corporations, and professional service providers. As we speak, the center is home to more than 36,000 professionals operating out of 4,300 plus firms who have chosen the DIFC as their place of business. Before we kickstart our discussion, I'd like to quickly go over our event running order. We will first start with a 15-minute background and report summary by Rida Al-Ansari, who's head of research for MENA from the team at Refinitiv. This will be followed by a 30-minute panel discussion and a Q&A session around why global hedge funds are migrating to Dubai. This session will be hosted by Salman Jaffrey, Chief Business Development Officer at the DIFC, with perspectives from a prime broker, a hedge fund, and the regulators. A few housekeeping rules that I would like to highlight. All attendees' microphones are to be muted throughout the webinar and cameras to be switched off. You may submit your question through the Q&A function and we'll try to incorporate it to the panel discussion. So let's get started. I'd now like to pass the mic over to Rida Al-Ansari from Refinitiv, who will be taking us through their findings.
Thank you very much, Mohammed, for the thorough introduction. Ladies and gentlemen, please allow me to share my screen, where I'll take you through the key findings of the report. So ladies and gentlemen, thank you for your time. A very good afternoon or good evening for those who are in Asia, or good morning for those who are in the US. My name is Rida Al-Ansari. I'm head of research at Refinitiv, and I'm very pleased today to take you through our key findings of our first report in a series of reports that we will be talking about emerging trends in Dubai's financial center. Our first report is the Next Global Hedge Fund Center. We look at the opportunities and outlook in Dubai. Very briefly, in my presentation today, I'll take you through four key areas that we have also highlighted in the report. First, we look at the global hedge fund landscape, where we look at the growth and key trends in the past few years. Then we move into the global transition of hedge fund industry. And there are a couple of key areas that stood out. Capital redemption was one of them, a lot of inflows, outflows from key markets. And then we will look at how sovereign investors have also been capitalizing on hedge funds to diversify and allocate more investments. Then the third section will look at opportunities and outlook, how Dubai has been able to attract both private and institutional wealth to Dubai. Then we will close with Dubai, the next global hedge funds. Obviously, what is really Dubai's value proposition for hedge fund managers? And then we'll talk about the ecosystem and infrastructure to support hedge fund capabilities. And then we'll look at the history of DIFC, how a lot of hedge fund managers have been moving to DIFC. So ladies and gentlemen, let's start looking at the growth of the industry. And I would like to highlight that the AUM as of 2022 stood at $4.8 trillion. And there are three key trends that I would like to mention in this slide. First, I would like to emphasize on the resilience of the sector, especially in turbulence times. The last few years where we had COVID, the industry kept its growth trajectory. I want to also mention that hedge funds is one of the fastest growing asset class in financial markets. If we look from 2013 all the way to 2022, we see a growth of about 160%, which again shows its resilience. And last, although we had redemptions, net redemptions in 2022, the market still grew by about 1%, which again shows its positive growth. Now that we know the overall size of the market, let's look at the key regions and jurisdictions. US, continental Europe, and UK, including their offshore territories, they all make up about 95% of the global hedge funds. The Middle East is surely a nascent market, but has a lot of potential growth. Right now, it's about 1%. And in the Middle East, DIFC has been emerging as a key hub for hedge funds. Within DIFC, there are about 300 wealth and asset managers. More specifically, on the hedge fund side, the companies manage about $1 trillion in AUM. As I mentioned, there has been a lot of redemptions in 2022 compared to 2021. If we look at the monthly average redemption between March and December 2022, we see there has been about $41 billion per month. If we take the entire year, we see that there was a net redemption of about $330 billion compared to net investments in 2021 of about $230 billion. Obviously, when you have volatility in market, including concerns over geopolitical risk, macroeconomic risk, high inflation, high interest environment, you would expect some reallocation in portfolios, especially the reversals in equity markets last year pushed a lot of asset managers and investors to relook at their portfolios. Obviously, there has been a lot of emerging hubs, the likes of DIFC and Dubai, where more attractive incentives have been offered, lighter regulations, not only to establish your business, but also to start operations, and abundant growth prospects. Especially if you have a deep market, you would expect a lot of growth. As I mentioned, sovereign investors have also been looking at hedge funds, especially during times where there's a lot of volatility. New strategies should be put in place. The overall value of sovereign wealth stood around $500 billion by 2022, which grew by 11%. That shows that actually there has been a lot of consideration from sovereign investors to consider hedge funds. And when we look at allocation, both from global and GCC, we see that in the GCC, there has been more allocation to hedge funds compared to the global markets. Now, ladies and gentlemen, let's move into Dubai and how Dubai has been positioned as a key hub for wealth. So looking at the chart on my left, clearly the UAE has outperformed a lot of key markets, including Singapore, Switzerland, and US. Again, what DIFC and Dubai has been able to do to attract all of this wealth. Today, the UAE has private wealth of $966 billion. When we broke it down further to look at wealth per capita, there is over $97,000 wealth per capita. There are over 92,000 residents that are high net worth individuals, out of which 251 people have wealth in excess of $100 million, and it is also home to 14 billionaires. Again, all these 4,000 have mostly come from the Middle East, Africa, and India. So Dubai as a global financial center, let's look at some of the rankings and where Dubai has been ranked in the latest Global Financial Center Index 33, which was launched last month. So over the years, Dubai has always been considered a global leader across different markets. In the region, Dubai stands out and is currently ranked #1. It has also performed quite well across different areas, government and regulatory support, financial services, as well as a very conducive business environment. Other benefits when it comes to ecosystem benefits, obviously in Dubai, there is a very convenient operational system. There is a very supportive regulation, as I mentioned, not only to establish, but also start operations. You have a very wide network of supporting businesses. Again, as a deep market, you would expect that. It has a very enabling innovation ecosystem in Dubai. And again, having a very deep and big market, you would be able to attract a lot of high caliber talent. DIFC in figures, the overall size is $800 billion, $450 billion in wealth and asset management. It is home to close to 4,400 registered companies, and it also hosts 36,000 professionals. So what is really Dubai's value proposition for hedge funds? Regulation. It has a very facilitative regulatory framework, and you would expect that you would expect that is aligned with global standards. Tax, something that is being introduced in a lot of markets. The tax regime in Dubai is very competitive. Supporting services such as prime broker services to support hedge fund operations. And of course, innovation and tech has been also a key component of the success of Dubai. So in terms of talent and how Dubai has been able to attract talent, location, which Dubai is positioned very strategically to connect not only Dubai and the UAE, but the broader neighboring countries, to connect them with the rest of the world. Lifestyle, of course, affluent lifestyle always attracts global talent. Immigration, which is one of the key factors for attracting talent. Dubai has a very simplified migration process to attract, and career development opportunities and career growth in a market that has global companies and is very deep. You would expect that out of Dubai as well. So ladies and gentlemen, how Dubai has been attracting hedge fund managers and firms. It's starting from 2023, we looked at the last 10 years, we see that there was 100% growth, 50% growth. Again, there was another 100% growth in 2016. It shows how consistently Dubai has been able to attract hedge fund managers. Even during the pandemic in the last 2 or 3 years, we see that there was a growth of 20% and another 8%. And this year, or last year, 2022, there was another 54% growth. So this year, Dubai DIFC has 60 hedge funds that have already registered or are in the pipeline that are about to get registered. Very importantly, 55% of the DIFC hedge funds originate from key markets such as the US and the UK, which positions Dubai in line with other global jurisdictions. So ladies and gentlemen, thank you so much for your time. I hope you found the presentation insightful, and I would encourage everyone to download the report afterwards. Thank you, Oda, back to you.
Thank you very much, Rida, for sharing with us a great insight. We'll now move to the next part of our webinar, which will feature a discussion by great panel experts with us today who will provide their insights and perspectives on why global hedge funds are migrating to Dubai. This panel will be hosted by Salman Jafri, Chief Business Development Officer at DIFC. Over to you, Salman.
All right, thank you, Mohammed. Good afternoon and good morning and possibly good evening to all of our participants from around the world. My name is Salman Jafri, and I'm the Chief Business Development Officer at the Dubai International Financial Center. Now, it's a real pleasure to host today's expert panel discussion on hedge funds. I think I've stated publicly earlier that this partnered report with Refinitiv became almost necessary, as it were, because the magnitude of global interest in this area, in this market, as well as the magnitude of the forces that are fundamentally changing the flow of capital and talent globally, have really forced our hand. It's super important that we take a view. Now, before I get to our expert panelists, a quick note. We had over 700 registrations from around the world, and typically for such conversations, there's always people who come in late. So let me just take a 30-second recap on what Mohammed in his introduction might have said, and some of you may have missed it, about the DIFC, which is that we're a 20-year-old English common law-based financial center, a city within Dubai and the UAE with our own courts, legal system, and regulator, with over 36,000 individuals who work at over 4,000 companies, of which are over 600 are financial firms. In addition to the nearly $500 billion in assets under management, we have a banking book of $200 billion. So, but without further ado, let's let me quickly introduce today's panelists. So of course, you've just heard from Rada Al-Ansari, who's head of research MENA at Refinitiv. In addition, I'm really pleased to introduce Niamh Taylor, who's head of EMEA at Schoenfeld. Delighted to introduce Dominic Reeve-Smith, who's MD of EMEA and head of prime and alternative sales at JP Morgan. And last but certainly not least, my colleague Chris Cameron, who's director of conduct team supervision and authorizations at the Dubai Financial Services Authority, which as many of you know, is our regulator. Panelists, thank you so much for taking the time to join us on this really very interesting topic. Look, I suppose a good place to start is to take stock of what's been happening. 3 or 4 years ago, we had an already deep asset management sector here, but there was no political strife in Europe. COVID hadn't happened. The interest rate environment was certainly different. And you fast forward 3.5 years from that point onwards, and the world in different parts of the world, certainly here, looks a lot different. So maybe we can get Dominic and Niamh to give us a sense of what the new current state is. What's been happening in this space in the last few years? Maybe Dominic, you can start.
Sure, thank you. Delighted to be here. Thank you, Salman and DIFC for the kind invitation. So I guess there's a few things that have happened during the last few years that you've made reference to, macro events, significant events that have really probably changed the way that industry works globally. Closer to home, for those of you that might be dialed in from the UK, there was Brexit. And for all of us, of course, there was the global pandemic. And I think that, the hedge fund landscape and industry is no different from any other industry. There's been a realization, an acknowledgement that you can in fact base yourself in other cities other than the typical hedge fund hubs of New York, London, Hong Kong historically. And there's a different lifestyle to be enjoyed as well. Especially, I would say that, given the really tough restrictions with COVID in Asia, we've clearly seen a number of hedge funds that have moved to UAE. I think that during that time also, there has been a change in terms of some of the significant asset flows to hedge funds, and the multi-manager platforms have really benefited from some of those changes. They have increased the amount of AUM that they're running, and they have started to really attract huge numbers of talented individuals. I was with a client very recently, and we'd done a prime consulting survey interviewing roughly 70 hedge funds, mainly in EMEA, to understand how people are now thinking about how to run a successful hedge fund post-pandemic. And one of the things that really struck us is that culture is really high up on the list. It's a key priority. And with culture, of course, come people. WFH, working from home, apparently is now in the past. It's all about WFT, which is war for talent. So there clearly is a lot of competition when it comes to talent. And I think that, what's being built in Dubai with roughly 60 hedge fund firms, as already been mentioned by Refinitiv, there's a real ecosystem that's being built locally. And I think that with the right partners, these businesses, are going to get bigger, and we're going to see a big change in terms of the numbers that you see locally in Dubai setting up. But no doubt, Niamh has more to say on that.
Thank you. And thank you so much, Salman and the DIFC for having myself and Schoenfeld participate today. Giving the audience, the hedge fund view, and we are a multi-manager, multi-strat, a global organization. We established our business operations in Dubai at the beginning of 2022, and were formally licensed in September of 2022. So feels like we were fairly early on the ground. I think one element that was incredibly important to us as an organization was thinking about the build out of our business as a vertical slice of our overall business globally. So the intention always being the Middle East is a very meaningful area of expansion for us. We are incredibly excited about the opportunity to source local talent, and our initial strategy was to rehouse some of our existing global talent on the ground in Dubai. I guess the route that we've taken and the strategy that we've deployed is to try and build out a very diverse group of risk takers. And I think that is, you know, Reda talked about the time zone advantage. Certainly for us, trading a global book across our macro and our quant and our equity strategies, being in a time zone that's advantageous to be able to deploy risk across all different regions and markets, I think has really played well for us and for some of our peer group. Dom talked about the war for talent. Certainly talent is our strategy at Schoenfeld. And, you know, I would say that initially the build out of our office was really born out of two things. One was an opportunistic merge with a pre-existing macro hedge fund, but also just a continued interest and desire coming from significant risk takers across all strategies within our existing operation globally. So, you know, we were fairly early on in terms of our investments. We've been very pleasantly surprised by the level of interest that we've received from our existing PMs, our APMs, and our analysts and other parts of our organization. And we're very excited about the future as we think about the continued growth, not just of the Schoenfeld business, but what's been fascinating for me as head of the region is watching our peer group and other single manager hedge funds continue to, you know, set themselves up and think about the opportunity set that Dubai can bring.
Let me, thanks, Niamh. Let me pull in Chris, because, you know, Chris and I have been working at this for about 7 or 8 years, but Chris has been here, as I'll tell you, a much longer time. He's been very active on the regulatory side in overseeing the expansion of what has become the region's largest pool of managers, overseeing institutional and private capital. And I'm keen to get his views on kind of the changing mix of businesses and business models that he's seen over time. Chris, if you don't mind, can I pull you into the conversation?
Sure, thank you, Salman, and thanks for the invite to be able to represent the DFSA this afternoon. Yeah, I've been here for just over 15 years now, and this is a really exciting phase in terms of the evolution and growth in the DIFC that we're seeing. I think, you know, the feedback that we've got over the last couple of years from a tremendously healthy looking licensing pipeline is that the DIFC is still the centre of choice. It's the leading asset management hub across what I would call an ever-expanding region. You know, gone are the days it's just Dubai, UAE, it's the African continent, it's the wider Middle East and South Asia as well. So it's ever-expanding. Last year we saw, as has been noted already, a significant number of entrants into the DIFC and the hedge fund business space, and continuing to see that in 2023 as well. I think, as also has been commented already, big migration from some key hubs already. The UK certainly is, we're seeing a lot of business move from there, East Asia as well, and to an extent the US as well. And I think what's been very interesting through the licensing pipeline that we've gone through is the degree and caliber of talent that we're seeing migrate to the DIFC. And I think in turn that's almost causing a reaction amongst competitors, but also within organizations and groups as well, that peer portfolio managers are keen to move to Dubai as well. I think the Dubai lifestyle as a choice to live, not just to work, and working in the DIFC is a key component of that. So we're seeing in turn the businesses that have come in already over the last 1.5 to 2 years actually expand extremely quickly. You know, we've got some firms that came in with 1 or 2 portfolio managers are up to 40, 50 staff already, with significant increases in AUM. And in turn, they're talking about moving teams over with back and middle office components as well. So, you know, it looks very bright going forward. We're tremendously busy with the pipeline that we've got. I think has also been noted already in the discussion. I think a lot of what the Dubai government did through the pandemic certainly added to Dubai and the UAE been put further on the map. And I think also what we're seeing a lot of in terms of the feedback we get from applicants and businesses that have set up, it's been nearer that pool of wealth with the high net worth individuals, ultra high net worth individuals, and also the sovereign wealth funds themselves. Yeah, I think hedge funds are being used more and more by sovereign wealth funds now, given the volatility that's being experienced in the marketplace. So being closer to the sovereign wealth funds and that kind of wider pool of clients across the region, I think, is a key component. And as I've said, I think we're already seeing key growth within firms that have only been here for about 12 to 18 months already. And I think a key component that's facilitating that is you've already got a very healthy service provider industry within the wider asset management field that have the expertise in hedge funds as well. So you've got prime brokers, custodians, fund administrators, all the way through to compliance and legal consultants and auditors that can help set up fairly efficiently and easily in that space. To date, there's a variety of business models that we're seeing set up in this kind of wider hedge fund business segment. I think a key driver in there, or a key components of that, is certainly what we would call the investment management or the portfolio management business, where, as I said, it starts off maybe with one or two portfolio managers moving here for kind of different lifestyle options and managing a slice of that global portfolio. And that's certainly a tried and tested business model that we're seeing very often. But there's a number of others as well, and those options we're very comfortable with. I think it also adds to the wider ecosystem. So, we've done a lot over the last number of years on the fund management space within the DIFC, the ability to set up funds in the centre and outside the centre. There's hedge fund components to that as well. So we're very comfortable as and when applicants are seeking that as an option. And I think very recently within that space, we've seen a number of engagements with possible applicants seeking to set up fund platforms in the DIFC. We launched the regime not that long ago. And I think that will also facilitate a lot of the DIFC and the wider Dubai strategy in terms of there's a high number of well-known names and profile coming into the centre that you would expect some smaller hedge funds and hedge fund managers to then spring up on the back of that. And I think the fund platform regime is certainly a possible growth area to facilitate that. We're also seeing some advisor arranger business models. So those types of business models are essentially advising the group on strategy, but also marketing to clients across the wider region. And while I mentioned marketing as well, we've obviously got the representative office regime. We've had a couple of recent entrants in the hedge fund space there as well. And as I said, the service providers, they're continuing to expand, and we're talking to a few possible additional entrants to come into that. And I think all that demonstrates that the feedback that we're getting, that the DIFC continues to be the preferred choice, but it is truly an international platform that we've got here in the DIFC.
Thanks, Chris. So there's a fair amount to unpack. Before I set up the next question to try and kind of tease out some of the things that Niamh and Dominic and Chris have mentioned, let me make two very quick observations based on some things that Niamh and Chris said, and also some questions that come up. One question was about the time zone, and the question was posed as, how do you deal with the lag? And in fact, just to build on Niamh's point, we see it as a coverage and operational advantage. So depending on the nature of the strategy of your hedge fund, some of our clients that are trading heavy manage to squeeze in, believe it or not, into one 24-hour day coverage of three time zones. So you can do Asia in the morning, EMEA during the day, and the US later. Sometimes it leads to some very interesting work hours, but operationally you can put people together to cover essentially, a significant part of the globe. So it's actually a very interesting source of differentiation rather than a challenge. Someone else asked about the small firms issue, which I think is very important. Chris alluded to it. Let me leave it. What I can say is that, to Chris's point, we have a number of very interesting platform type of companies that will be looking to come to the DIFC. And I think that will help us quickly diversify into not just the large global firms, but also a wider range of smaller firms. All right. So having talked about the current state, I guess the next area I wanted to get our panelists' view on is what is the emerging space looking like? Now, a bit of context. This place, the DIFC, used to be a place we first built the financial center on the backs of large global banks. It was very much a balance sheet finance type of a place. Large firms came, and afterwards smaller firms came. We then had a second wave where we had large institutional asset managers come in, And after they were successful, smaller ones came. What we're seeing now is this very interesting switch within the asset management space of, as Chris mentioned, this move away from traditional sales offices. So this was a very successful, DIFC was a very successful place from which to gather assets and to manage a relationship. And we're seeing this influx of portfolio management, people who are making deployment decisions into global markets. So with that context, I want to pull Dominic and Neve again into kind of their sense of the types of firms, the types of trading, types of platforms that they're seeing, and maybe provide a bit more color into some of their businesses and their clients. Maybe
sure. I'll kick us off. Just want to close out on the time zone point actually, because I think you need to take a different approach to what your working day is going to look like when you sit in region, and it's about really being work smart. And I think certainly what I hear from our investment professionals on the ground is they actually feel like they're ahead of the market. They have time to come into the office, to read, to do some deep work, to prepare for the open. And yeah, of course, it means on some days they work later, but on some days it means those of whom have family members and children in region actually have the opportunity to see their children, to take them to school. So actually, I would argue it provides a great amount of balance. You just need to be flexible in terms of your approach and mindset. With respect to the types of firms and the evolution, Chris, I think what I heard from you and certainly what I felt on the ground is a real sense of a hedge fund community building within the region. And, quality attracts quality. And there's been a high level of attrition in terms of really high quality organizations going out, building in region, investing in the region from a talent perspective, from an infrastructure and a real estate perspective. I think the opportunity set that investing in the local markets brings is very, very exciting. In a global environment where it feels like every equity trade is becoming more and more crowded and compressed, having an entirely greenfield site in terms of thinking about MENA markets more broadly, I think is extremely exciting. And I think the advantage of actually being on the ground, being close to, market makers, liquidity providers, being close to corporates and organizations that will provide potential very interesting trade ideas is incredibly important. That's certainly part of the strategy that we've deployed when we've decided to make a move on the ground. I also think, capital market activity in region is heating up quite significantly. And certainly Dom will probably give a view from the banking perspective. But again, I think having that broad mentality and mindset around Dubai being multi-asset, Dubai being a home for a macro trader, a rates trader, someone who's, focused on Middle East markets from an equity perspective, and obviously a home to quants. And I think there's exciting developments happening within the UAE in terms of universities building campuses and talent kind of being born and on the ground from that perspective as well.
Thanks, Neve. So I think to add to that, and Neve's very close to this, look, the hedge fund community are very sophisticated and very demanding. And I think that what's critical when setting up outside of the typical hedge fund global hubs that we know, it's critical that the continuation of the service levels from your partners is up to speed. So look, on behalf of JP Morgan, as an example, we've been on the ground for many decades. We have 300 plus very talented people running a business that is in growth mode. And I think that regardless of whether you're running a quant strategy, a macro strategy, or a long short strategy, that is going to be critical to business continuation. The other thing that maybe I'd add to that is it becomes difficult if the service model locally for your team starts to differ versus other locations. So, choosing the right partners, as I say, is going to be a big factor. I think the build out of the hedge fund ecosystem as well is something that certainly the banks, and I know on behalf of again, JP Morgan is something that is paramount, it's critical, and it's something that we're working on. What we've seen so far is, in the most part, it is the multi-manager platforms that have taken the lead in terms of the local setup. I think that, speaking to clients in the EMEA region and also some of our big global clients, I think some of the monoline players that are running single strategies are also interested now in taking part. If we think that there are 200 to 250 investment professionals that have moved to the region in the last 18 to 24 months, Dubai now has a proven track record that you can run a business from there. So then it comes down to a certain extent, a lifestyle choice. I think also, just looking ahead, the UK election 2024, Salman, you may be busier than you expected post that.
Yeah, well, it's very interesting to see in real time almost a very palpable change in both mindset, attitude, and kind of feel for key kind of markets in the last 2-3 years. In particular, I mean, one thing I've said, I've said as well, which is that a common response to COVID and workforce displacement tends to be a very simplistic answer about, oh, it's about Zoom. But I think, what I'm picking up from you guys and what my clients tell me is validates the point that, COVID, and some other kind of issues broke the conceptual link between what you do and where you do it. And once that happened, for businesses where on the margin, you can still create economic value from location A, B, or C, and you have all of the kind of the lifestyle and regulatory and safety and security and other kind of issues locked in, it's proven to be a very, very competitive advantage. And Niamh, not to put you on the spot, but I really enjoyed getting a tour on Schoenfeld's new headquarters in Miami, right? Which is itself very interesting because 4 or 5 years ago, maybe we might not have envisioned that, right?
Yeah, look, I think our intention is that Dubai will sit alongside Miami as an extremely attractive location of choice for our people. And I think what's, why people join our firm, really collaboration and culture. And Dom talked a bit about culture. And I think in order to really successfully have a high level of collaboration, you need to have critical mass in location. And I think, what I'm seeing within our people, but also across our peer group is, many of the risk takers operate in pod-like structures where there's a lead PM and then there's a number of associate PMs and analysts supporting the senior. That seems to be the trend for Dubai. It's not just one individual that's moving because of the economic efficiencies and the lifestyle. It's an entire team. And there's a mini ecosystem. And I think that's a very interesting, trend. Personally, what I'm thinking about on a forward is the secondary market for talent and what that actually looks like. And it's something that certainly keeps me awake at night as the hedge fund market continues to mature, and it's obviously rapidly going through a period of growth. When things slow down slightly and everybody's bedded in, as it were, I feel like there's going to be an incredible opportunity for movement across the different hedge fund organizations and platforms. And I also feel there will probably be an opportunity for movement amongst, either in both directions between, the on the ground, very sophisticated sovereign wealth funds and the hedge funds. And I think, that's going to be an interesting trend for us to follow and an opportunity as well.
So in fact, Niamh, let's use your comments to segue into, I think you've just started the process already, which is awesome, into a little bit of a forward look at what we think is coming around the corner. Now, from our perspective, we're quite accustomed to this notion of looking forward because Dubai is a young, forward-looking place. So we're pretty bullish about what's next. For those on the call who may not know, certainly our panelists are aware of this. A few things that may be worth mentioning with our panelists is, a few years ago, we didn't have the demonstrable success and commitment to capital markets development that we've seen here in the last 12 to 14 months, where we've had a plethora of listings that have been really world class. I think it would be very good to understand your views on how that's going to impact the next generation, as it were, or your hedge fund portfolio managers. So that's one issue. The other issue is, Niamh, I'd love to dig deeper on this issue of secondary talent. What happens in year 2 or year 3, where portfolio managers have been here on the ground, have enjoyed some success. What happens then? There's also some very interesting observations I'd love to get your comments on when it comes to, for example, the potential for investment in digital assets and other alternative asset classes. So let me turn over the mic maybe to Dominic and to Niamh just to comment on what they think is coming next with our context.
Niamh, should I just very quickly touch on maybe the secondary piece of the talent? Because I think it's something that we're keeping a really close eye on. So if we think about some of the economic efficiencies that exist by residing in DIFC, I think that a lot of the talent that is relocating right now could, in the next 2, 3, 4, 5 years, could be launching their own hedge funds as well. That's one thing. The second piece, which I think we've probably touched on a few times already, but it genuinely, when we look at the global hedge fund community, there's roughly 4 trillion of AUM right now. There is a pretty fierce concentration of that capital and AUM with less than 100 firms. And those are the firms that are typically trying to secure the talent, whether that's talent retention or it's talent acquisition. The more firms that are setting up locally in Dubai, there's almost this kind of fear of missing out. So if you know that your key competitors are now based in Dubai and you're running a firm that has 500, 1,000 people in London, and you know that some of those individuals may well be keen on relocating, then it almost means that you have to be set up in order to, as I say, not just attract talent, but retain. And then, of course, as Niamh's just mentioned, once you're there, then you have access to a very significant pool of talent. If we think that 250 investment professionals have moved over the last couple of years, and I think we made reference to it a little earlier, some of those firms still only have 4, 5 to 10 employees locally. Those teams could well grow, double in size, quadruple in size. So there could be a very significant talent pool that most global firms will want to tap into.
I think it's 2 things. It's retention and attraction, right? And so, for example, we're all competing for the same talent out of London. We're now competing for talent in London that's wanting to make the move to Dubai if they join the organization. So again, you're already disadvantaged if you're not one of those handful of multi-manager, multi-strat firms that can say, not only will you have a great home with us, but we have a workstation and, space for you and your team to come on board in Dubai effective immediately. So I think it's forward thinking. With respect to kind of future state, I think the community is maturing, and I think there's a consensus view that there's a very high quality level of individual, moving out to region, provided that is kind of sustainable in the medium to long term. And I think that will be sustained if the infrastructure continues to develop, if the economic efficiencies stay as they are. My view is that this is not a short-term, fad in any way, shape, or form. I personally believe, what's happening within the Middle East more broadly, the usefulness of certain countries, progressive nature, the clean energy transition, and all of the change that's taking place across the region it's going to provide a lot of very interesting economic opportunities for people that are willing to come and kind of invest locally and build a life. And I think, I think the perception with Dubai perhaps previously was there were infrastructure challenges, there were real estate challenges, even schools weren't being invested in. I think people that have done tours recently, certainly people that we have on the ground and our peer group are very complimentary of the experience, of the level of commitment. Obviously, there's a number of significant university campuses being set up in the UAE as well. So certainly I feel like the future looks bright from that perspective.
No, thank you, Niamh. I wanted to pull in Chris as well into this conversation, because a lot of, I think, what's coming down the pike, as it were, in terms of sector development, I think the DFSA will definitely have a view on that and will be an important player. So Chris, your views?
Sure, Tom. So I think, there's clearly a very good industry forming here, and what we'll do is form our usual approach. There's a job that we need to do as a regulator, but we need to make sure that the framework's calibrated correctly to ensure that new entrants can come in efficiently where we can, reduce regulatory burden and put business enabling kind of components into the wider regulatory regime to assist with the wider DIFC and Dubai strategy. So that's always at the forefront of what we've done and what we'll continue to do. Over the last number of years, we've done a few kind of initiatives that have certainly helped a number of the business models that I've talked about earlier and that fellow panelists have mentioned, both on the investment manager space, the fund manager space, and advisory ranges as well. So I think a key component of what we did was the implementation of the QIF fund regime. So, once we start to see more hedge funds being set up in the centre, once these kind of smaller hedge funds come in, the regime is well catered and set up for that. We've seen a high growth in the number of fund managers set up over the years, and the funds domiciled in the DIFC, as well as being able to manage funds in other jurisdictions. Streamlined a lot of the process, the timing around that down to kind of 4 to 6 weeks for a licensing process for a fund manager, and made that kind of more proportionate response for the types of firms and businesses that we're looking and talking about today. So that's all in place already. Mentioned the fund platform regime. I think that's a key component going forward. That's already in the regime, but I do envisage that will probably be used quite a bit going forward. More recently, we've also lowered the capital requirements for all the fund managers right across, whether it's public, exempt, or qualified investor funds, lowered those significantly. And then also this year, we've actually gone through a first phase project of reducing regulatory burden. Now that really focused on the advisory ranges. And as I mentioned earlier, we've got a few have come in this year and a number last year in the hedge fund business model space. So what that essentially looked at was the capital requirements, regulatory requirements, reporting requirements, and remove anything that we felt was a kind of additional burden that was unnecessary. I think a key component also over the last couple of years is on the digital space that we've mentioned. We've had two tranches of policy projects. We've had the implementation for the regulatory framework around investment tokens. That was back in 2021. And then more recently, just at the tail end of last year, we had wider crypto regime that we implemented. Now, there's a lot of digital asset companies looking to come into the centre and Dubai. And we know that the hedge funds are very interested in that. So that's a starting point for us. That will continue to evolve or look at that framework this year and into next year. It's a fast-moving space, as is the technology space more broadly as well, and complements the DIFC Authority's innovation strategy as well. I think most asset managers now are looking at ESG as a kind of risk management kind of approach as well. And to complement COP28, we're also assisting the country, and our strategy kind of feeds into that. So you'll see us quite heavily engaged in that space over this year and beyond as well. I think some other initiatives that we've got this year will certainly assist in the hedge fund manager space, whether it's asset managers, funds, advisor arrangers. We're looking particularly at the asset managers with a phase 2 of reducing regulatory burden. So again, we'll be looking at things like capital requirements, reporting requirements. So that will be an engagement that we'll go through with the asset management community. And there's a big segment of the hedge funds in there and coming into that space as we go through this year. Also in the fund space, we're looking at some wider components, kind of wider structural parts of the regime. Again, just kind of business enablers and trying to make it more efficient to come into the regime and just provide clarity. It's an international platform, as I mentioned earlier, and giving greater clarity around the ability to manage funds in and outside the centre and some of the concepts that we've got in the regime. We'll do some work on that. I think another business enabler that we'll look at, or currently looking at right now, is the feeder fund regime within the DIFC. And we're expecting a big pickup in volume in that space. So just providing a bit more clarity around the requirements, making sure it's fit for purpose. I think certainly we've seen a pickup in that space, and a key component of that is to enable wider passporting across the wider country of the UAE. So that's a key area for us. And then I think, last but not least, I'd mention as well, mentioned some policy initiatives there, but we're always looking to refine how we do things, our approach, our engagement with participants in the centre and those coming in. So there's a number of outreach that we'll do this year, as well as further engagement with our firms and consultancy. And central to that will be some more information and further refinements that will provide information on in respect of the licensing process. So we've recruited heavily last year. We've increased the team. I've got about 75 to 80% of licensing in the DIFC and business models we talked about today. So we've moved up the team from about 25 to about 40 staff to cover both licensing and supervision of those business models. And particularly important for licensing and the efficiency that we need to ensure through that process. And through looking at the licensing process, refining it just to make sure it's proportionate and it's risk-based as well. And through that, as I mentioned, you're bound to achieve further efficiency gains. And a key part of that is our digitalisation project, making sure that everything goes to online forms and reduces that kind of time to process, but also looking at our lead-in time as well, what we would call the pre-applicant process, so trying to refine and condense those aspects as much as we can. And we'll come out with some more information on that in the coming months.
Right. Well, thanks, Chris. I have one quick follow-up before I have one final round of quick questions before we close. We have 3 minutes. Chris, on digital assets, essentially, our existing, our considerably large book of asset managers today can, on a permissions basis, apply to be able to, trade and hold digital securities or tokens once they let the DFSA know. Correct? Is that the right way of thinking about it as an asset class?
That's correct. So from the turn of last year, we've added that second phase in to cover the wider crypto regime. And whether you're an advisor arranger, whether you're an investment manager, whether you're a fund manager, you're able to be involved in that space, providing that you apply for the appropriate top up to the license that covers the crypto component. And we welcome that engagement.
Super. Well, we're almost out of time. Before we go to the panel, we've seen a massive rise, obviously, in institutionalization of private capital in a region that's very well known for sovereign capital. In a nutshell, are you bullish or bearish on the role of that private capital in your own businesses going forward? Maybe you?
Bullish, in a word. I'm not going to say bearish.
Yeah, it's probably an unfair question.
I will say that having a diversified stream of capital existing and perspective is incredibly important for any hedge fund and any multi-strat more broadly. So the more diverse the capital base can be across the region, from sovereigns and private organizations, I think the better.
Dominic, anything from you?
We have a very long-standing relationship with most of these clients that are public and private. So we're there for you all.
Super. My thanks to the panel. I'm going to pass the mic over to Mohammed Ode for the close.
Thank you, Salman, founders. for sharing your valuable insights and perspectives. And thank you, participants, for attending this session, which I hope you enjoyed and found helpful. After the webinar, you will receive an email from us with a link to download the report. And we look forward to seeing you all again at our future webinars. And if you'd like to find out more about the DIFC, please do get in touch and we'll be happy to assist. Thank you.